Bitcoin and Ethereum, for example, have grown in popularity in recent years and are currently exchanged by both individual investors and huge corporations. However, following the Fed's decision to raise interest rates, the crypto market has experienced considerable turmoil. The plunge put all cryptocurrencies into a spiral, making investors concerned. The broad-based drop has sparked strong selling in the cryptocurrency market as investors seek to liquidate their holdings and limit their losses in the face of further uncertainty. Should long-term cryptocurrency investors take advantage of the market's severe volatility, or should they wait it out? Let's find out more from Max Keiser. Welcome back to our YouTube channel. Bitcoin maximalist Max Keiser discussed the recent price action in the Bitcoin space, the reasons behind Terra Luna crash, and the scammers in the crypto space. He also predicts why fiat currencies could go bankrupt and why Wall Street is a scam covered by central banking. Make sure to watch all the way to the conclusion of this video because we will share with you the thoughts of Max Keiser and why he believes all cryptos other than Bitcoin are a Ponzi scheme. Let's get going. Keiser went on to say that Greg has pointed out that the asset class that is Bitcoin is shrugging it off, and that it hasn't had much of an influence on Bitcoin in the past. Some of these significant scams, such as OneCoin, occurred a few years ago, while others had a greater impact on Bitcoin's price. He was disappointed since he expected to meet Wall Street rejects like Mike Novogratz, a hedge fund reject. Novogratz blew up his hedge fund and took a couple of years off from the industry. According to him, Novogratz saw an opportunity to replicate all of his Wall Street schemes in crypto. Keiser said that Raoul Powell was another Wall Street reject. Raoul was denied a partnership opportunity, according to him, so he went off and retreated into a cave for a while till seeing an opportunity in Bitcoin. Bitcoin is both the world's greatest and worst industry. It draws both the worst and the best people on the planet. We call it price discovery because it is dynamic. The United States confiscated foreign assets and defaulted on their US dollar debts on February 26. This was analogous to the United States defaulting to the United Kingdom in 1971 when Nixon went gold. He decoupled us from the gold standard, and the 50-year experiment started. Fiat money, which was really the first time ever, and we had all economies running on a fiat standard with no hard money. And then on February 26 was really an echo of that moment when the US essentially announced that the dollar is entirely untrustworthy, that we will default and take foreign country reserves whenever we choose. We've talked about central banks and convexity before, and as a result of the 2008 bailout, they took on a lot of these debts themselves. If long-term capital management had a 100-to-1 leverage, the Federal Reserve Bank is conservatively leveraged at 50-to-1 right now, if not closer to 80-to-1. If they attempt to raise rates any further, the central bank will face huge default. The central bank will require assistance. As a result, the Federal Reserve bailed out Wall Street in 2008. They exchanged all of their bad debts for new treasury bills and transferred all of their bad debts to the Fed's records. Now, all of that bad debt is worth 0 cents on the dollar. No one wants to acquire U.S. debt. The Treasury bond of the United States is being spit out of the reserves of countries all over the world. This was a situation in which Alan Greenspan, the head of the Federal Reserve at the time, decreased interest rates to help LTCM. As a result, all of America's retirees were forced to collectively bail out these hedge fund people in Greenwich, Connecticut, as Greg suggested. Of course, when the plunge protection team was formed in 1987, we observed that Wall Street's lunch was once again preserved, but the losses were divided to the whole public, and Wall Street was saved. That happened again during the subprime mortgage crisis in 2008. Everyone else had to suffer because the bankers were saved. It's happening right now. There's Walt, the Crisis Part 2 from 2008, in which everyone on Wall Street who is a banker is bailed out, while everyone else suffers from inflation, price distortions, and social unrest. It all comes back to the concept of moral hazard, which is the wiggle room provided by central bankers such as Al Greenspan and others, as well as Ben Bernanke and Jay Powell, who claim that we have the freedom to engage in moral hazard. To guarantee the functioning of these markets and their liquidity, we have the authority to circumvent ethics and morality in the legal system. Do Kwon had been involved in a number of frauds prior to this one, so this was just the latest in a long line of them. It was created as a fraud in the same way that Big Connect was created. It went viral like a scam, and it's more than simply careless. Keiser thinks it's criminal that he didn't conduct even a smidgen of due negligence on this event con. However, all of these cryptos are going to be blown away. Technically, they're all securities. Anyway, the SEC is dragging his heels, which leads us to wonder why Gary Gensler isn't doing his job. Is he just another enslaved regulator out there doing his owner's bidding? Bitcoin is so lovely that it will drive away these charlatans, these enslaved regulators, and there's no way to sugarcoat it. These criminal scumbags are recidivists who need to be locked up. It's unfortunate that they're not in prison. He claims that it merely proves that America's judicial system is dysfunctional, but he believes that this is evident across the board. We see it all the time. We live in this world. There's no law that applies to you if you have regulators in your pocket. For many years, this has been the case on Wall Street. Markets have wiggle room, according to Alan Greenspan. He's aware that a lot of nonsense occurs, but he stated that we require liquidity. He defended it 20 years ago, but what's occurred is that minimal wiggle room has become a defining feature of these markets. There's no longer any meaningful price discovery. It's all about the wiggle room. It's all a ruse. The pricing are all out of whack, and the typical person is the one who suffers the most. It's not just the people on Wall Street who get bailed out every time they commit a criminal due to a lack of judgment. What can you say about Max Keiser's opinion on Wall Street and central banks? Feel free to share your comments and don't forget to like and subscribe. Till next time.